provides a way that data can be shared to compute, but not to be disclosed, so that the data interaction has a new feasible solution. We are very optimistic about this area in the future. The second area is the capitalization of information generated by the data, like a digital asset, which becomes a carrier of certain rights, including ownership rights or dividend rights. The business model is involved here are mainly divided into two types. One is the storage and the traceability of this information. Many consortium chains are working on this. We have saw lots of projects. And the second is the smart contract, which is how to further commercialize this equity carrier information. And the smart contract can be used to showcase business in many forms, including NFT, NFT, trading in the secondary market, and the token script, and so on.
That's fantastic. I think that's extremely comprehensive. So I want to come back later on some of those themes you talk about. And I think it sounds like Fenbushi, the way you guys are investing are not really impacted by how the short-term crisis is hitting China. Let's come back on some of the topics. Mia, let's hear from you.
Sure. Yeah. So I think the recent geopolitical landscape has demonstrated to us, or as at least as us, we're long-term venture investors who believe in that crypto is a revolutionary technology, is that the world needs crypto. And so this tension between the world it's making us even more bullish and confident on the overall long-term impact of this technology. And specifically, to say we're in Dragonfly, we're looking for early stage startups and founders that we like to really be come in early and as a seed investor and really help out the founders and shape their global strategy. We believe that China is a huge market, especially in terms of trading volume, and users are all in a general financialization is centered on Asia, whereas a lot of the good tech is still coming from the West. So at Dragonfly, we're thinking of ways to think about go to market of China and Asia, greater Asia from day one, and how can we put together a team and then and in a way that can take up that market. So yeah,
absolutely. You guys do seem to have a very good reputation, I guess, across the board, and very strong network. So I think DC has joined us through a ambiguous phone call. So DC, are you with us?
Yeah, I can hear you. Can you hear me?
Great. So do you want to quickly introduce yourself and Hashkey Capital?
Yes, sorry about the technical problem. My name is Deng Chao. I'm the managing director of Hashkey Capital. Thanks for the introduction earlier. We've been in place for quite a long time, since 2014 and 15, but Hashkey Capital is a new brand name incorporated in 2018. It is the overseas investment arm of Wanxiang Blockchain Labs. Through Hashkey Capital, we've been actively investing in a global blockchain space for the past 2 years. We've invested around 30 projects so far, deployed around $50 million globally. We've been investing in most of the major areas in the blockchain space, and we are still actively reviewing new projects.
DC, so before you join us, I think the first question I asked the panelists today is, has the recent COVID situation impacted your investment thesis or not? And what are the trends you guys are seeing? Would you like to take this question?
Yes. I have to admit that the COVID-19 has some impacts on the industry as a whole. We see activities in the primary market much lower than previous quarters. As you can see from recent data, about like I see the new investments like decreased by at least half in this quarter compared to like 2 or 3 quarters ago. But for us, we have invested 6 projects so far as of today. The change is that we have higher standards. We raised the bar for our investments. At the same time, the check size is much smaller than previously. This is partly because many of the projects that are raising in the market are setting a more realistic goal for their target, and the valuation is more reasonable than previously. The other reason is that they're asking for less money than previously. So in general, the market as a whole has been affected to some extent, but we are still actively looking at new projects and investing. Like I said previously in other talks and sharing, since day one of our investing, we are not a status-driven investor. We are a ecosystem investor. We have been investing in most of the major area of the space. So we haven't changed our investment, if you call it a thesis. We haven't changed our thesis. We stick to it, and we are still looking at the projects in all the major areas in the blockchain space, from the tech layer to application layer to crypto finance.
Sounds great. Thanks, DC. I think some of the point you mentioned kind of aligns with what Jehan mentioned, right? Raising the bar, request the projects to have tighter product market fit. And you also talk about like, lower the amounts, which is kind of resonates, I think, with the general investment sentiment out there. Now, I want to check because I think all of you are extremely well known, and you're based in Asia. Of course, you have strong networks in other parts of the world. But this question I want to ask is, do you think as a Asia-based investor, despite your strong networks in other parts of the world, do you have any advantage? Is there anything particularly benefits you?
Is that question to me or everybody?
Open to the board. So whoever wants to invest.
Yeah, I think for sure. I think the being from deeply rooted in Asia has a huge advantage because I think the majority, or a lot of the trading volume and the user activity is actually based in Asia, and also the mining industry is also Asia, and especially China has the strongest and well-developed mining industry. We have companies like Watts Miner and Bitmain, and and we have in Sichuan province, there's I just came back from Chengdu last week. I saw DC and Rin there as well. But there's a very vibrant community in terms of mining, and mining is an influx of Bitcoins, if you think about it, and that is why there's so much trading volume happening in Asia. Some of the largest exchanges are also based here. So if we think about go-to-market strategy for the founders, really like if you overlook this region, that's you really should think about it, and especially for like a lot of the DeFi founders, for example, like they're also really thinking of how do you crack this centralized finance world that is centered around Asia. So yeah, I think that's for an investor thinking about that global strategy, it's a really important piece.
Yeah, yeah, because you guys are pretty big on DeFi, and it's interesting. I think earlier you made a remark that the tech teams, a lot of them are in US, Western world, but the users, the market user base is actually here. Trading activities are here. So I guess for projects, even though they have a strong team somewhere else, they should really not miss out on the Asia market. Yeah.
Yeah, if I could just chime in on that, I think that, you know, we're so fortunate to be in Asia because, you know, I think from our thesis for our fund really is an Asia focused, which means we not only invest in companies in Asia, but bringing companies to Asia that we think will have a, you know, kind of strong potential here. But Asia really, from I think all of our perspective, is really going to be what we expect to be the driver of blockchain and crypto adoption for the next, you know, kind of major phase. It's really clear that, you know, as the center of global trading in terms of the number of the sheer scale and kind of volume of trade that happens with the top exchanges, I think like 6 of the top 10 spot exchanges and 7 of the top 10 derivatives exchanges are basically Asian or based in Asia. There's so much opportunity there. And then with everything that's happening in China with the DCEP and also the BSN blockchain, regardless of whether it's actually a, you know, an actual blockchain or a distributed ledger or some kind of variant, it still creates a massive kind of signal enforcing function for the rest of the world to kind of follow on and keep up. And then with Southeast Asia, the sheer population, I think really presents so many opportunities to skip a generation of, you know, not even bricks and mortar, but clicks and mortar, and go straight to kind of, you know, blockchain mortar. And I think it's going to be really exciting to just have that opportunity and be part of a very, very concentrated kind of group of people. And, you know, like my esteemed colleagues here, to help support the founders. So I think that Asia has overall a great advantage. And, you know, for us, I think the other, you know, thing that we're happy about is just that we've been part of the kind of founding community building up Asia for a number of years, and we've been able to see all of the different dynamics and all the different players, and we've been able to just have that kind of longevity of kind of experience to be, you know, through different market cycles. So I think overall, that kind of experience is really what gives us, those of us in Asia, that kind of advantage.
Yep. Yeah, absolutely. DC, do you want to share your view?
Yeah, I pretty much agree with what Mia and Jihan shared. It reminds me what's happening here in the blockchain space reminds me of the internet industry. You see, the internet industry is pretty much dominated by companies from either the U.S. or from mainland China. In the blockchain space, I'm seeing similar trends in China and in the U.S. Like say, we see more projects with creative ideas, with more disruptive. How do I say that? Mechanism designs at the conceptual level. They're good at that. Well, in China, for one thing, it is a market too big to miss, and also we see the Chinese community, the Chinese participants are better at bringing new technology into real-world applications. So that may explain part of the reason why there are more trading activities in Asia and particularly in China, while there are more projects in the layer one space in the U.S. in the West, while there are more application cases or use cases or trading related projects in Asia. So I just want to add a little bit.
Yeah, I think your analogy to the internet how internet was developing really struck a chord, because there was a period where in the US you have proven models of like Google, whatnot, and you can see, you know, in China the replicas of that, or take it a proven internet business model and take that to apply to China, just surely because it's a massive market with a huge user base, or is almost a guaranteed head start. So I guess that can be applied to the blockchain business. Ring, would you like to share some view on this? I guess, sorry to call you on the last, because the rest might already said it all.
I have mentioned before for the last question, yeah, our strategy in Asia is in China is the enterprise blockchain related technical services, it's mainly about the combination of blockchain and big data. So I want to repeat it again, and let's move on to the next question.
Sure. I think the next question is also around the key focus, right? Because I think every couple of months there seems to be a new flavor of the month. You know, in 2018, because I got into the industry in early 2018, kind of like the height of the market. Perhaps you guys can share more about what's happened before, but what I've seen is in 2018, there was a lot of money thrown into public chains, the next Ethereum killer or whatnot. And then after a while, smart contract platforms. Then after a while, there was there seems to be different flavor, and then it goes into, I think, application, then it goes into DeFi. Now I think it went into enterprise. So if you have to put your money on something over the next 12 to 18 months, which area are you putting your money in? I guess it's not literally you're putting your money in. Which area are you gonna bet on? Jehan, would you like to take this question first?
Sure, I'll try to keep it brief. I do think that there are trends that we see. I definitely I think CBDCs are an emerging trend. I think that stable coins are still pretty kind of active. But perhaps the kind of buzziest buzzword, which, you know, for good reason, is DeFi. DeFi seems to be very present, and open finance obviously is very much on everyone's mind. But I would say that, you know, maybe I take a slightly kind of nuanced view about it. I'm going to coin a term called hi-fi, which is hybrid finance. I think that DeFi and CeFi and the combination of the two is actually where we're going to see a lot more kind of activity in the next 12 months. I love DeFi, and I believe in Web3, and I believe in all of the kind of new and innovative ways of being able to kind of take leverage and, you know, connect value, kind of value pools in a distributed way. But it's just a fact that most systems are very hard to use, and the endpoints are complicated and still, you know, a bit vulnerable and difficult. It's just hard to use. And I think that's always going to be one of the main friction points for really true DeFi to emerge at scale. I think we also believe that enterprise is going to be one of the kind of key drivers to adoption. And so I think that centralized finance that's focused on kind of blockchain and crypto and services blockchain and crypto, I think will play a big part. And what I'm really looking for is this kind of hi-fi, this hybrid model where we have centralized kind of companies that incorporate models and layers of DeFi into their systems and into their offerings in ways that are truly value add, easy to use, and take advantage of existing larger user bases. And I think that's a pretty interesting way, and something that, you know, I would really bet on. For us, you know, one of our investments is BlockFi, which is one of the world's leading kind of crypto lending, and they are CeFi, but servicing the kind of crypto industry. But I know that them, as well as many others, are really looking at how do we take advantage of DeFi and kind of incorporate into our offerings to provide the types of flexible distributed solutions and products that customers may also want.
Yeah, absolutely. That's actually, we're very optimistic on open finance. I think it's the same thing as what you say, hybrid, both centralized finance and decentralized finance. That's why our current batch has such a focus trying to generate synergies among the projects. So Mia, DeFi is very big. for Dragonfly. Do you think this is the area you guys gonna continue to focus on?
Yeah, definitely. I think that yeah, we have a very dedicated research team on we track the newest frontiers on DeFi, and yeah, and I think we definitely believe in the general open finance DeFi movement. And you know, on the other hand, we also have a very strong focus on CeFi, which is, you know, mostly our investments in this category are deeply rooted in Asia. You know, I think CeFi is almost more of a internet business. It's a way of, you know, how do you do growth hacking, and how do you acquire users and things like this. So one of our investments last year was Bybit, and then it's rising as one of the top derivative exchange in the world. And what they've done really well is doing you know, affiliate marketing and really tapping into the trader community. So while on the other hand, but on the CeFi side, also we're paying attention to the structural changes in the space, like option market. That we're looking at ways that how can we aggregate liquidity and to really provide easy access for users to enter the trading world. So on the DeFi side, yeah. You know, like I said before, we're paying attention closely to the next frontier, and I think recently we're looking into researching into a decentralized BitMax investment, and we've already placed investment in this category, and very excited. And this is also the recent DYDX which is also one of our portfolio companies, launched their perp product, and is also gaining pretty great traction. So I think corresponding to what Jihan's saying, that there is a hybrid that is, I think it's whether you're stemming from DeFi or the CeFi worlds, the trend is inevitable, but to, you know, seeing how do you maneuver the ways to kind of combine the two infrastructure. So
yeah, and you guys also invested in Tagomi, right, which was recently acquired by Coinbase. So that's the one provide prime brokerage. So you can already see, I think, some of the consolidations and M&A activities that's happening in this space. And I think Funbushi also invested in Amber. There's quite a few hybrid finance related deals.
But first of all, open finance, we think open finance is a quite interesting concept. It's different from DeFi. It's based on blockchain, but unlike DeFi, which is based on a high degree of decentralization, open finance actively embraces regulation and focuses on efficiency and ease of use. We may pay a lot of attention to open finance rather than DeFi. Because of these features, open finance would be adopted by financial mainstream to solve some existing programs that we are interested in. In this area, I am most interested in the infrastructure projects and projects that can optimize the business model of traditional industry. And the infrastructure of open finance now is pretty much like the infrastructure of blockchain back to 2017, which is still at a very early stage. In the mainstream business field, especially in the financial field, the requirements of precision are extremely high. Without a set of mature and secure solution, it is impossible for new player to reach the traditional market. So that's the infrastructure and the reliable solution are still the core competency in this field, we think. And to give a few examples, the most common infrastructure in open finance is oracles that provide interaction between on-chain and off-chain and custodian projects that secure funds. These kinds of projects have extremely high requirements on security and correctness. Decentralization is more like an efficient way to achieve these goals, but it's not the only way to solve this problem. That's what we think.
Yeah, I think that seems to be pretty consistent. Nobody is purely focused on DeFi. I think investors seems to be taking a more balanced view, whether it's centralized finance or decentralized finance, as long as there's real benefits addressing key pain points. DC, you guys also were quite active in investing. I think BlockFi, a couple of other finance related deals. Do you want to share the rationale and what are your thoughts in this area?
Yeah, I would love to. I heard a lot of like new words, buzzwords in the what we call the crypto finance area. There is DeFi, there is CeFi, and Jihan just came up with this new idea of Hi-Fi. If I would contribute one more, I would say RegFi or CompliantFi. That's regulated finance or compliant finance. Part of our rationale we investing in BlockFi is because they are doing lending in a very compliant way, trying to get as many regulatory permit or approval or license in as many jurisdictions as possible. That's why part of the reason why invest in them, besides their business perspective. We are also looking at opportunities in the crypto financial infrastructures, like Mia mentioned earlier, like Tagomi, Anchorage, and other crypto financial infrastructures that can help the investors or the asset managers to operate in a more compliant and regulated fashion. This gives comfort to both the regulators and also institutional investors. I think one of the obstacles that stops institutional investors into the space is one, regulatory clarity. The other is all the infrastructures. They don't see the infrastructures in the blockchain space as reliable as in traditional finance. Besides the crypto finance area, I think there are also another two areas that deserve our attention. One is like Jihan mentioned about the user experiences. Take wallet for example. For most of the wallets in the space, you have to like write down all the key, either the keys or the memory keywords. It's quite deterrent for most new users. What we like about it is like make this just as simple as a iPhone like biotech recognition or facial recognition. That's part of the reason why we invested in Zengo. It's the first keyless wallet globally. So it's very user friendly. Any newbie in the blockchain space can use it like a mature internet app or internet product. That's one area I think deserves mentioning. The other area in the tech space is we have been talking about user experience, but not many of us are paying enough attention to developer experience. I think it was in 2017 or 18 at Ethereum's DevCon. We started. There was one or two teams talking about developer experience. You see, many of the public chains in a place, they're trying to attract more developers into their public chain or into their ecosystem, trying to like grow their ecosystem. But the problem is that when the developers get onto their chain, it is very difficult for them to develop any project on them, because a lot of the chains, the developing environment is not ready yet. So we need a team or a project that can help all those developers to create a ready-to-use, integrated developing environment. And we found this team in China. That team is Chain IDE. So they were working with over 20 or 30 chains to help create a ready-to-use integrated developing environment for all the developing developers. And they are attracting, I guess, tens of thousands of developers from the community. So those are the two areas in the tech space I think deserves our attention, and the RegFi or CompliantFi is what I think we should pay more attention.
That's thanks for that. That's absolutely. I think that's a very refreshing concept, and people tend to overlook for sure. And it's almost like the whole digital asset infrastructure space is maturing so quickly. And if you took a mirror of what's already exist in the existing fiat financial world and just look out for the gaps, I think you can almost look out for ideas you can build out for in a hi-fi world, to quote Jehan's word. So I think.
Can I just jump in for 1 second?
Sure.
I just want to emphasize one point. I love what DC is saying about the kind of developer tooling, and I think that what's interesting about our space generally is this kind of convergence aspect. We keep talking about infrastructure, we keep talking about kind of DeFi and CeFi, but really what we're talking about is the convergence of all these things. If you look at like a modern successful exchange, it's not just trading, right? It's kind of trading plus staking plus quasi-custodian plus derivatives plus additional financial instruments on top. And you have all these kind of separate players who are doing slices of that. But ultimately, there really does seem to be this kind of convergence of all these things into one or more platforms. And I think that's unique to the kind of crypto side of things. But the reason why I think both the developer experience, the user experience is so important is because the potential for scaling of what we're doing, not only to the crypto side, which is still a relatively small market, but to the total aggregate of all capital markets in the form of security tokens. And I think that, that's really not that far away. Touching on what DC was saying about, the kind of regulated assets and regulated approach, we also are firm believers that the regulated markets will be very big, because that's where all the kind of traditional existing assets and value sits. It's trillions and trillions of dollars of it. And it's just really on the precipice of being tokenized or ledgerized in the form of digital assets and security tokens. The regulation is just about here. We just had, or I think we're just about to have our first kind of regulated security token exchange here. I know Singapore has their own program. Many, many different jurisdictions are starting to launch them. It's almost becoming a competition now. And I think that, that's really going to open up so much value and trade and transaction. And everything that we're doing now in building these tools, building these concepts, and building this kind of infrastructure is going to really be put on the main stage when it's in front of the major banks, when it's in front of the major kind of asset managers, and trading floors in the form of security tokens. So keep an eye on that, because I think for us, we're investing in this space. We've invested in like Securitize and Liquify and a bunch of others. But really, I think that many companies are on the forefront of developing this and bringing it out when the stakes get really high.
Yeah, well said. Thank you, Jehan, for complimenting that. I think that reminds me, when I was watching A16Z, Chris Dixon's video on Crypto School, I think he was talking about how this crypto world is like a new idea maze, right? There are just so many things, so many space for creation, and so many new things that can be built, and it's truly exciting. So I don't want to hog all the questions because I do have a lot of questions. I do enjoy getting the insights out of you guys, but I think the projects will have more to gain from this. So perhaps we can get them to ask a couple of questions, use the rest of the time. Shikai, do you want to promote the project so they can ask questions, and then we can take a few questions from the audience?
Sure. Let me do that right now.
All right. So who wants to go first? I see Paul is showing his face. So you want to go first, Paul?
Sure, I always have questions. Thank you for everything you've shared so far. Now, some of you mentioned that you've invested in both tokens and equity, and has that ratio changed in the recent past? And how do you feel about tokens these days? I know some of you have touched on this. We're talking about security tokens, et cetera, but just sort of as a general, I'm just trying to understand the trend. Because for a while I've been hearing crypto investors talk about their preference for tokens because of the liquidity. But you know, when liquidity goes to zero, that argument becomes less appealing, obviously. So I'd love your input on this.
Anyone in particular?
Oh, no, I was just asking the panel. And any of you guys who wants to tackle this.
Okay, I can answer the question. Hello?
Hello.
Yes, we can hear you, Ring.
Okay. For Fundraising Capital, we invest in equity more than in token. Since the projects in equity has a more clear modern business models, and the projects related, like the projects related to the ecosystem services and the service for companies, and the business model are quite clear, which is mainly charging regular project fee or services fees. But for the tokens, especially the open source protocols, the common business model does not work. So the business model for this practical layer projects are always been very controversial issues. And in fact, the design of various token mechanisms has a common problem. We think that is the failure to form a closed loop. In most cases, we are just acquiring the tokens rather than using them in the ecosystem. So we are just, a common practice is trading tokens in the secondary market. We think this failure causes that token value is unsustainable and unstable. So right now, we may pay more attention in equity investment.
Thanks very much.
So I'll just give a quick comment on that, because our new fund is really equity focused, and that's by design, coming out of the kind of 2019 side of things, the earlier 2019. That's not to say we've given up on tokens at all. I mean, we still actively but selectively invest in tokens, but we have a much higher bar for the type of tokens and the models that we're looking at. I think it's fair to say that crypto economics we haven't seen it work yet. I think we all believe that it works and it should work, and we think it will work. It just hasn't.
I think that's totally fair, yeah.
And it's fair, right? It's just,
Yeah.
you can't really have that high of an expectation for a model that has very little adoption and very little kind of proof points. But I think this is going to be a really exciting next 12 months, because we're starting to see companies with millions of users. I was talking to my friend over at Brave and Bat, and he said they have like 2 million monthly users or something like that. And we have a company in our legacy portfolio called Human Protocol, which just did a deal with Cloudflare. They've got millions of users too. So it hasn't worked, but I think we're about to see if it works. And that will be really exciting. But in the meantime, we're seeing a lot of companies that are running out of runway because they raised in token and they aren't able to kind of drive revenue. So as a startup, I think if you're thinking about, well, should I raise token or should I raise equity? I guess I'll hedge a little bit and say that you should raise safely and raise in a way that have the space, time and space to kind of prove out not only your thesis in terms of your business, but also wait for crypto economics, to prove itself out, which I think we all agree eventually will happen.
Right. Yeah, no, my interest in them is purely in the governance space. But again, there are no models that have proven themselves. But the potential seems to be there.
Hopefully,
But
hopefully you will get there one
so far,
day.
none of us have been able to realize it. Yeah, yeah. Okay, thanks very much. Thank you.
Thank you, Jihan, Ring, and Paul. Do you have next question?
Not for me.
Yes,
Mohammed.
yes. Hello,
You
everyone, and thank you for that.
yourself and your project.
Yes, I'm Mohammed Abdu, founder and CEO of Pravica, and Pravica is a unified communication suite based on blockchain technology and enable user privacy and security. I was curious about the new trend of investment because we are living in a hard days now for the startups and founders to attract more and more investors. But there is some new trends now I started to look for, which is something called CSO, or which is something, a new way of ICOs that depends on when you have a project and you have a base customers that you can already believe in your project, so you can come and invest in you with platforms that enables CSO way of investment. So how can you see the future of these new channels for the investment that can enable startups to grow rather than going every time to knock the doors for the investors? Thank you so much.
Do we have any panelists that wants to take the question? DC, did you hear the question?
Hi, Emma. I heard the earlier part, but seems the reception was not good. What's the ending part?
Yeah, actually, I didn't manage to catch that part. Are you are you able to articulate that again?
Yeah.
Muhammad, sorry.
Yeah. Okay. So I'm just asking about the new trends for investments for blockchain companies or projects.
New trends, do you mean format? Whether it's token,
yes,
equity,
yes,
safe?
Yes, it's not ICOs or tokens, it's not equity, but something called continuous security offering, which is abbreviation of CSO. This way of financing started to come on the surface in the difficult days right now. So how can you see the future of this way of investment for the startups?
For continuous security offering. I myself is familiar with this. I don't know if any of the panelists is familiar and want to jump in. If not, you might have to explain a little bit.
Yes.
What is continuous security offering?
Yeah, so it depends that we can consider it a mix of crowdfunding plus ICOs. So for startups or for the projects that already have a large or a large pool of customers and they are believing in the project, the company can offer something called CSO, which they can offer some kind, a portion of the revenues for the new investors, and don't go for VCs. They go for this channel. This is something new, but I need to think about what's the future. How can you see the future of this investment model?
Got it. I think you're talking about like a hybrid model between crowdfunding as well as token issuing.
Actually, yes.
Yeah, I don't know if any of the panelists wants to jump in for something like this. Is this catching on? Because I myself doesn't. Jehan, would you like to share? I see you're nodding.
I know, but I've been speaking so much, I feel bad. But I have to say, like, so literally, was it today's Friday? Wednesday, I did a meetup with Simon de la Riviere. Simon de la Riviere is ex-Consensus. He's really one of the authors of something called the bonding curve. And really what you're talking about is offerings using a bonding curve. And one of the most high-profile examples of this is Fairmint. So Fairmint is used as a continuous security offering. And what's interesting about the bonding curve is that it's really good for early, like first liquidity, first offering, first liquidity. The way that you can think of it is like training wheels for a market where there is no price discovery, where there is no market. And the bonding curve is a smart contract enabled system which allows for both the sale as well as the sell back of the asset, which is, could be a security token, it could be just a utility, some type of non-fungible, whatever. And I think personally, it's an incredibly innovative and useful way. I think we're going to see a lot of these coming out. And I think in combination with things like the expansion of Reg CF, regulation crowdfunding, this year in the US, with raising the cap from 1 million to 5 million as proposed by SEC Commissioner Hester Pierce, it will completely revolutionize the way that we have both offerings and price discovery for early stage startups. So I'm incredibly excited about it. I'm glad you brought it up, and everybody should go check out Fairman. We didn't invest in them, but maybe I wish we had.
Disclaimer. So that's something I guess you can look into, Mohammed.
Yes, thank you so much.
Great. Do we have next question? John or Arthur, I think earlier you were turning on. Arthur?
Yes. Hi. Yeah. Is it clear to everyone?
Yeah, we can see you.
Yep.
We can hear you.
Okay, cool. I'm one of Viewbase. So essentially what we are building is an analytic platform for both a trader and investor. So we track almost all of the exchange balances and inflow outflow. So there's a few popular service provider for this, like Glassnode, and Viewbase is one of it. And our service is right now completely free. So it's we're getting a pretty good website traffic and user right now. So I think some of the questions I want to ask is, first of all, is currently stablecoin is one of the most successful story in crypto over the last 2 years, but we cannot invest in stablecoin directly because there's a misnomer, like the price stay pegged to the fiat is pegged to. So are you guys seeing any opportunity in the space that can benefit from this mega trend? Yeah.
Benefit from basically analytics.
Yeah, I mean, that's my question. Do you guys see any opportunities that you can invest that benefit from this stablecoin mega trend? Yeah.
Any takers? I think Jehan is biting his lips. Like, I'm not gonna speak now. DC? The mega trend, I think basically Arthur's team is building for getting insights from on-chain data and using movements in whale wallets or exchange wallets to inform, I think, traders' decisions.
Yeah, I just some personal observation about the rise of stablecoin. If I remember correctly, I think the total size of stablecoin has reached over $8, if I remember correctly. That's almost the top 3 or top 5 coin in the market. There has been a lot of discussions or conversations about USDT, Tether, and the other campaign, that is USDC and PAX. So the two campaigns, one is what we call unregulated. The other side is regulated. The rise is mostly from, in terms of size, is mostly from Tether. There's a lot of assumptions, what's happening behind. I don't think it's a good time to discuss today, but we all know there is something happening behind about the use cases of USDT. I see more potential in the regulated or compliant stablecoin like USDC and other competitors in a space, because to echo what Jehan said earlier, like we like it or not, regulation is going to kick in sooner or later. I think stablecoin is a bridge that connects both the crypto space and the fiat space. It's a good bridge, but we have to use it cautiously. If we're using it for illegal or wrong purposes, this may get us into trouble. If we're using it in a regulated way, and that may be a good opportunity to start some projects in a space.
Does that help to answer your question?
So that's my brief answer. Yeah.
Yeah. Actually, I have a follow-on. So on this, there are so many countries working on CBDC, US, or a version of it. When this comes out, do you think the current version of stablecoin will still be relevant? And this is not just to DC, whoever have a view to share. DC, what are your thoughts?
I think we have to draw a line between DCEP in China and Libra in the US and other sovereign current currencies. We all know that DCEP in a strict sense is not a digital currency. It's a enhanced form of a, if I could say that, of Alibaba or Tencent. It's a new form of mobile payment. As in the name, you can see it's a electronic payment system. It's not a new form of digital currency. It's not a new form of a currency. While in the U.S. Libra, it's a new form of a quote unquote current currency. That's a big difference. For other digital currencies which are linked or anchored to their sovereign currencies, that might be a different story. However, in terms of use cases, this DCEP or Libra would be a very good promotion for the awareness of the general public and for the adoption of new payment forms built on top of a blockchain technology. It would be a positive sign, probably a trigger for the adoption of the blockchain technology. But behind all forms of the so-called digital currencies, we have to look into the purposes, like DCEP and digital dollar recently. It's more like, I think it's a competition between two big powers. When you look at the commercial level, each market, each country has its unique features. So that's my comments regarding that.
Yeah. Well, still early stages, so I guess we'll wait and see how it pans out. I think if we have no further, sorry, Ring was going to say something.
Yeah, I just think DCEP and Libra may have more relationship with the traditional world. I mean, the payment, maybe the commercial things like this. And the stable coin is just like a coin in the cryptocurrency world. So they are just different functions.
Yeah.
So,
yeah.
I have a question. A different question for every VC over here. Our company Stacks, we are raising a Series A right now, and a common question from non-blockchain focused VCs is that they do not understand blockchain, and although they are interested, they know the benefits of blockchain, they are saying that they do not understand blockchain, and they feel that it's not a space that they want to go to. So I'd like to ask for every VC over here, what is the reason why you want to focus on blockchain, and so that's and how do you think that is we as a blockchain focused company can actually overcome questions like this from a non-blockchain focused VC? Thank you.
I think that's $1 million question. How do we get institutional investors over the line?
Yeah, I think so. I think like for blockchain investing, it's really I think it's, if you look at like traditional VC, there's like usually somebody dedicates to AI, somebody those look at biotech, and like, you know, there's all these like verticals. But for blockchain, it's such an interdisciplinary field, and it takes up a lot of research and understanding of computer science and trading and economics and all these things. So, so yeah, for example, at Dragonfly, we have a team that really covers, like, you know, we see like the sub verticals of the general, like, call it the crypto umbrella, and then that includes like, you know, deep technology and trading, and also understanding of China and Asia is also important. So so I think that's also probably why like it's really hard for like traditional VC to understand like purely based on like a single point, but rather it's actually much more you know, interdisciplinary and like complex. So so that's why I think like raising from you know, you want to be raising from investors who like understand like what you're building and get your vision. So aligning with the crypto native venture investors, which, you know, I think there are plenty of the good folks in the industry are dedicated to investing in crypto. So I would say that might be a better like strategy. Yeah.
Although I think there are some.
If I may add,
sorry, DC, go ahead.
If I may add, if I may add one point is that this from a longer period of time. It takes time. If you look at what happened in early 2000 in the blockchain in the internet age, not many VCs were looking at the early internet startups. Only a few of them, and that brings their investment generates a lot of returns. It's happening probably in a similar way in a blockchain space. It takes time for the regulators, for investors to first have interest in a space, and then allow them some time to dive into space, to know what's happening in space, what are the potentials, and then maybe at the third phase they will do a test investment to see if they can if the industry is mature enough for them to invest. That so it takes time, but the bright side is that the blockchain space has been in existence for over 10 years, and there are already some well-established investors in a place. Some of them are with the traditional VC backgrounds, like Anderson, Sequoia, IDG. Those are very big traditional VCs. There are also blockchain-focused specialized VCs, like every panelist here on a panel. There are other blockchain specialized investors in the space. So if I'm doing a raising round, I would go for the low hanging fruits. Talk to firstly people who already have interest in a space, and then expand your network to other potential investors. Probably for your, I remember you're doing the Series A. Probably for your Series C or pre-IPO, those bigger VCs, they may have like learned enough to make their decisions to invest in you. I know in Singapore, big VCs, investing firms like Temasek, Prevailing, they are all looking at the space. If I remember correctly, one of Temasek's associate entity has invested in the blockchain space. So the good news is that you have, I think, enough mature enough, not mature, well-informed investors in a space. In a longer term, I think more and more VCs will join in.
And John, I think make sure you ask the same question for our next fireside chat. We will have Prati, the head of blockchain team from Temasek. So what's preventing you? Yeah. So I think consideration of time, maybe we'll take one or two questions from the audience.
Oh, excuse me, Emma, because for the special business model for blockchain, I think we have to mention two models like smart contracts and the tokenization. They are special models in blockchain area, and they are bringing new opportunities. Yeah. Can I?
Yeah, sure.
Yeah, and with the increasing digitalization of business model and a broader understanding of blockchain technology, we think many companies start to see the ability of smart contracts to reduce friction and add value in business models. It's just it's a unique opportunity in blockchain, and tokenized rights can be integrated across systems and traded on the market. And this allowing a limitless integration and forming a frictionless market. So we believe smart contract and tokenization is are very potential directions and representing the derived digital business model in the future. Especially.
And hopefully this gets magnified in the traditional business and push for mass adoption. I think that will much easier bring the traditional investors over the board.
Yeah.
Yeah. Cool. Thank you, John. Let's take two last questions from the audience. We have a question from Sam. So Sam, I actually know Sam relatively well. Hi, Sam. Thanks for tuning in. He's an angel investor. What are some of the use cases which are doing very well during the pandemic? Any anecdotal stories you would like to share besides Zoom really taking off? So I guess this question must be in the context of blockchain.
Yeah, maybe I'll kind of jump back in. I think, hey, Sam, I think that one of the things that I think is quite interesting, I didn't invent this phrase, but I heard it and I thought it was quite apt, is in the context of cybersecurity, because everybody's working remotely, remote is the new enterprise. And home is really the new enterprise. I think that was the phrase. And what that means is that work is being pushed to the edge. And that means homes, and homes need to be secured now. So most people are still connecting to enterprise software through, kind of typical like home Wi-Fi and home types of routers, et cetera. And I think that introducing decentralized technologies as a way of securing that connectivity and network supply chain is going to be much more important. And while there are kind of traditional technologies that can help do that, I think that the decentralized technologies will offer additional layers of security, not as kind of the urgency scales. While, top level, types of mechanisms and services are available like in the US and in Europe and potentially in Asia, they're not really available in developing countries as much. And so I think that the blockchain technology in particular, things like, we invested in Orchid. I think actually a bunch of us here invested in Orchid, which is decentralized VPN. These are the types of things that I think are going to be quite critical and quite helpful for the next generation. And it's really spurred by the kind of situation of COVID and making people work remotely at scale. So I'm excited to see more of that. And really abstracting that, privacy, just all privacy technologies are super, super important and much more urgent and much more valuable. So there's a premium for privacy, I think that will kind of extend.
Yeah, absolutely. I think Zoom actually acquired a blockchain company, Keybase, to help them to encrypt because of there was a lot of issues with privacy when the search started. Mia, is there anything you would like to share? Any interesting use case?
Yeah, I would say I echo with the privacy aspect. I think the increasing tension between also like sovereign states and the citizens are proving that there is a increasing distrust of like centralization, and and also I think the like crypto like exchange is still like I believe that Coinbase released a report after Black Thursday. There's like a ton of influx interest in that as well. I think that also correlates to the increasing like you know the geopolitical tension is making people paying attention to crypto. So any of these portals, right, like the exchange are usually the first portal to the crypto economy, also are getting picked up.
Yeah, makes sense. DC, do you have anything to add?
Yes, just one last thing. I see recently we're looking at the on-ramp, off-ramp space. We're seeing a rise in the need for crypto on-ramp. We're seeing the rise in most of the emerging markets or less developed areas, like in Africa, South America, Mexico. There was a huge need for the on-ramping of from crypto to fiat, from fiat to crypto. That's probably one of the effects of this coronavirus. We've never seen this before. Before the virus, and there was huge rise in the amount, the size of on-ramping needs.
Yeah, definitely. That's an interesting point to note. Let me take the next question. This question is about main spot and derivative exchanges are based out of Hong Kong. Also, it is the home for main trading firms and crypto hedge funds. With the current political situation, do you see any relocation trend in the long term? Do you see any implication for crypto in Hong Kong? I think this question is custom made for Jehan.
Yeah, it's a bit of a tough one. But yeah, I'll kind of like dodge the question a little bit by kind of commenting not necessarily the political situation, but about Hong Kong in particular, but really the political situation. I think for crypto exchanges, I think that regulation, and we kind of touched on this already. Like regulation for crypto exchanges and crypto activity is on the rise. It's here to stay. It will be, I think, the baseline for a lot of this generation. I think it will swing towards decentralization and unregulated activity as well later. But at least for this generation, exchanges will need to be kind of fully regulated in order to kind of keep playing at the level that they are. I think it's, in the early days, you can kind of, move fast and break things. And now that they're broken, I think some exchanges have been playing kind of, what do you call it, jurisdictional hopscotch to try and find the next jurisdiction. And we've found that it's not necessarily that kind of easy to do. So what's going to happen next? Hard to say. I mean, I think that it seems like most of the exchanges that are serious about building long-term businesses and maintaining long-term businesses are getting regulated. And they are taking the licenses on, and they are kind of transforming their businesses into, for better or for worse, real financial institutions, and will be beholden to the regulation that comes along with that, and the cost that comes along with that, and the lack of speed and nimbleness that comes along with that. So I think it's a good thing for the industry because it allows us to grow and mature. At the same time, the more that we have these types of, whether they're sovereign or kind of regulatory pressures and restrictions, it also creates the opportunity for decentralized systems. We were touching on stablecoins and sovereign currencies. And I think that actually the biggest threat to these private stablecoins and private kind of currencies are the sovereign ones. But I think as the sovereign ones start to take hold and displace a lot of the opportunity and suck the oxygen out of the air for the USDTs and of the world, I think that there will be value propositions for some of these, and it will just boil down to utility. A sovereign coin has a particular utility. It's good for use in that sovereign jurisdiction. I can pay my taxes. I can pay certain things. I can be regulated and use it. And non-sovereign stable coins and currencies will provide different utility, anonymity, uncensorable, blah, blah, blah. So all the typical stuff. And I think that it will always boil down to what's the value proposition of this application. So I think we'll see this kind of like over and over, and exchanges are no different.
Yeah, totally agree. Does any of the panelists have anything to add to this point? I think we're running out of time. So I have a quick look at some of the questions. I think they were answered in one way or another, such as, do you guys invest in blockchain developer tool? DC does mention they invested in one, which is called the Qing IDE out of China. And then blockchain infrastructure, I think that was also sort of covered. So with that, I would like to thank all the panelists, Jehan, Mia, Rain, DC, for taking out the better time on the Friday afternoon to join us, sharing insights, answering tough questions. We're really putting them on the spot here. I really appreciate the support. And for the audiences, we do have a couple of other high-profile fireside chat coming up, such as with the head of blockchain from Temasek. We're also inviting someone from Binance to be confirmed and as a surprise. So please do stay tuned. And thank you all. Have a good Friday and keep safe.
Thank you, Emma.
Wherever you are.
Pleasure.
Thank you.
Thanks everyone.
Bye.
Thank you. Thank you. Bye.